Hello dear students. In this session, let us understand the proforma of working capital requirement. So theoretically we know that what is the meaning for this working capital? That is the fund, the capital which is required to run the day-to-day operations of the business. But how to apply this in practical? That is in companies. Probably we may assign to estimate working capital requirement of the particular business. So in that scenario, how to do? How to estimate, how to calculate. So that is what we are going to discuss for today's session. Yes, forecasting or estimation of working capital requirements. So factors to be considered. First factor is that is the total cost incurred on materials, wages and overheads. So what are all the expenses which covers this working capital, that is for running the basic operations of the business, everything it comes under this working capital. That is starting from raw materials and then wages, overhead, that is some other additional expenses. Okay, and if it is what going to remain in the warehouse, again it requires some cost, and that also comes under working capital, that is warehousing cost. And there are three different parts like raw materials, work in progress and finished goods. So work in progress, again how you are going to convert your raw material from WIP, that is work in progress, and that to FG, that is finished goods. For doing all the different process, again working capital it supports a lot. So that there are several factors involved in this. So average credit period, how much credit period that you are going to provide to your customers, that is for 30 days or 60 or for 90. It also requires some cost. And next is the amount of cash which is actually required to do the day-to-day business, all the petty cashes. Okay, and next is some advance payments. In some cases business they also deal in this advance payments, so that also comes into this consideration. And next is the average credit period to be allowed by suppliers, that we are in a position to do the payment to the suppliers. So like this, there are several factors which includes in this working capital. So now how to calculate this working capital? It is estimation of working capital. So basically in a company, being acting as a finance position, if they are asking you to estimate the working capital requirement for a particular business, so how to do? Concept is, for calculating this working capital, formula is current assets minus current liabilities, right? So current assets starting from the raw materials, work in progress, finished goods, even debtors comes under current assets, as we all know. And all the prepaid expenses, advance which we paid, and all the cash balances that we have. So all the assets that we are having right now comes under the current assets category. Then what happens to current liabilities? Current liabilities is something that we are in a position liable to someone else. Okay, so where if bills receivables comes under current assets, obviously then bills payables will be on current liabilities. Okay, so if debtors on current assets, obviously then the creditors will be on current liability side. And all the advance received from debtors, wages that where we need to pay, and then the manufacturing expenses, all the production related expenses that we are doing during the productivity time. So for all these things, all the expenses, all the liabilities, we say that as current liabilities. So contingencies is somewhat the additional expenses, some unexpected expenses that we also include here. So this CA minus CL which gives the actual working capital. It is required working capital, so that we can find out the actual net working capital for a company. Thank you all.